Hey guys, it's Jason. Have you ever wondered how drug lords and other criminals get their money into the financial system? See, it's not always easy just to deposit a bag of cash at your local bank. That's actually where real estate comes in. Now in this video, I'm going to walk you through four things. One, just how big of a problem money laundering really is in the real estate sector. Two, the methods used to launder money via real estate in both the private and commercial space. Three, which parties are the most susceptible to money laundering. And lastly, I'll give you tips so that you can be on the lookout in your next real estate sale to make sure you're not unwittingly participating in a money laundering scheme. Sounds good? All right, so let's get started. So first, how big of a problem is money laundering? Well, in order for us to understand how big a problem money laundering is in the real estate sector, we have to see just why real estate lends itself to being a pretty good vehicle, shall we say, to launder money. Now, this is often because the related governance regulations are not robust in many jurisdictions. For example, in the United States, real estate brokers and agents are actually exempt from performing due diligence over their buyers. In Australia, there's no reporting requirements for a broker or lawyer dealing with foreign purchasers, which is why any company can really buy property without having an actual onshore presence. And in the United Kingdom, any foreign company can buy property in the UK without having an in-country presence. Now, due to these regulations, criminals will use multiple methods to launder funds. I'm going to discuss the top 5 methods used in private real estate deals. But before I do that, make sure you launder the like button by clicking it below. All right, now to some common money laundering methods. So method 1 is using third parties to purchase the real estate. See, criminals have become more sophisticated in their methods of laundering money. So a common technique is to buy real estate with a third party or family member as the legal owner. Then deposit the proceeds of the crime into this person's bank account so they can make the purchase. Now, this clever way to launder money has been around for decades and actually continues to be very popular among criminals. Now, there are two main reasons why many choose this method. One, it's difficult to prove that there was any bad intent behind the transaction because it looks like a legitimate sale from an outsider looking in. And using a third party or family member, say a cousin or an uncle, will reduce suspicion even further since people usually trust those close to them, and anyone looking at the deal would say, okay, that kind of makes sense. Add that to the fact that the housing industry has been thriving recently, with prices soaring and mortgage rates pretty low. Right? Inflation is also on the rise, which could make property values go up considerably faster than other investments. Now, this would cause investors who want out of stocks or bonds due to lack volatility, give them reason enough to consider trading one type of asset for another, right? Namely, going into real estate instead of other more traditional investments that have become less attractive over time due to the different current economic trends. Cash that is obtained through illicit means such as drug smuggling and other criminal activities can be used to purchase assets. However, these funds cannot be accepted by most financial institutions without raising red flags, right? That's why it's common for criminals to use loans or mortgages to cover up the money they made illegally and pay them back with legitimate funds. Now, the second method, going into it, we just talked about, is using loans and mortgages to launder money. Now, in order to launder money, criminals love to use loans and mortgages as kind of a cover, right? So the repayment of these loans provides a perfect opportunity for mixing illicit funds with legitimate ones, making it whole. Now, I will be honest. I think the process of moving illegal funds into the banking system via mortgages can actually be really easy. If the criminal doesn't have any credible assets to speak of, but they do have access to a steady income, money laundering business, right? No one will give them a mortgage. So what they do is they find someone else to vouch or co-sign on the loan with them. Usually another criminal who has some kind of lawful income that can kind of help them get a mortgage. Once they're able to get a friend to sign on the dotted line for the mortgage, they close and they begin the process of moving their illegal funds into the banking system via mortgage payments. Now, the monthly payments are automatically withdrawn from an account that's in the criminal's name at some bank offshore, but all of it goes through one of their banks here in America because they can't have any direct contact with those accounts or they'll freeze them. So they take the money from the offshore, going into the American bank, and then from there have that American bank pay the mortgage. Now, the third method is through the manipulation of property values, and this impacts everybody. According to the U.S. Sentencing Commission, mortgage fraud is one of the most common white-collar crime. Falsely inflating the value of a property can increase the amount of money a bank lends to a criminal for mortgage, while falsely and deliberately underestimating the value can reduce the criminal's tax obligations. So it is difficult for an individual to carry out this kind of fraud by themselves. You typically need a team of people, right? The victim banks are not likely to lend without some kind of third-party checks on verification of income and assets. An underestimation would also be subject to independent investigation if it was unlikely to be accurate. However, by creating an organized criminal group which works together, they're able to successfully carry out these type of schemes. So, for example, a real estate appraisal firm may ask for third-party checks on verification of income and assets in the client's application. However, depending on the firm, they may not independently investigate the likelihood that the information provided is actually correct. Due to this, when a real estate appraisal firm estimates the value of a property, it's unlikely to have a reasonable estimate of the actual value of the property due to not having sufficient contacts with the victim's banks. Now, a criminal may take it a step further, setting up fake companies to buy each of the properties, and then they'll use family members as third-party corporations to lend money, and then from there they'll overvalue the properties in their mortgage applications. Now, this strategy is effective because they can use the income of their relatives who are not qualified for loans on mortgage applications, which adds more equity to the property. Now, a group might go even deeper, right? So criminals might even start creating fake companies that purchase real estate, and then they'll falsify documents so they seem like viable options for lending institutions. They will also use family members who do not qualify for loans themselves, but have enough income to make this strategy work in a semi-successful way. Now, it is also not uncommon for illegitimate real estate brokers to set up fake companies to buy a family home with cash and then use their own family members as third-party corporations, lending the money out at exorbitant rates without any intention of paying back the loan. Now, in some cases where they believe that they may fail an appraisal test or possibly, face the suspicion of a bank and being turned down, the corrupt real estate brokers may even go as far as overvalue the property in order to boost the equity on paper. Now, one of the most common money laundering methods used in real estate is actually structuring. Now, the goal with that is to avoid triggering a currency transaction report, or a CTR. Now, a CTR has to be filled out when depositing cash over $10,000. To get around this, criminals break up deposits into less than $10,000 amounts across different branches of the same bank. Often, they'll ask for certified checks to be made out to a third party shortly after the deposit. Now, however, the problem with this strategy, though, is that there are many limits to how often an individual can do this before the bank starts noticing some kind of unusual behavior. See, so when banks notice these behaviors, they will begin blocking future deposits. They'll even close the account if it's clear that fraud or questionable activities have taken place. Working in white-collar crimes and anti-money laundering for almost a decade now, I've seen my fair share of structuring, from individuals that use multiple accounts at different banks to people who use the same account at one bank but deposit the money in multiple locations on the same day. I don't know why they think that that's not going to cause a red flag, but it almost always does. So structuring is actually a very common money laundering method used by criminals. Particularly, this is typically done by those in the narcotics trafficking because they have a lot of cash and they want to find a way of taking that cash, putting it into a bank account, and then having that bank account transfer money over. So that is what you'll see a lot of times when it comes to structuring, is that it will be typically with narcotics trafficking. Now, the next method would be using rental income as a way to disguise illegal funds. See, criminals are creative when it comes to their finances. One way that they decide to maneuver things around is to lease properties and collect rents for tenants who just don't exist. Now, how does this work? Well, the criminal purchases property in either their name or a third party's name. Once the property has been purchased, their next step is to find a way to move their illegal money through the system and appear legitimate. Now, this is where they develop a paper person, which is someone who exists only on paper. Now, this person is going to rent out the property and pay the criminal a set amount every month. The criminal then deposits their illegal funds into the paper person's account and transfers funds to their account as evidence of rent payments. Now, sometimes these rent payments may come via check or even P2P apps like Venmo or Cash App. This way, the criminal is able to show income that appears legitimate, and the bank is often none the wiser. Now, so far, we've spoken about money laundering primarily as it relates to private or residential real estate. Think single or multifamily homes. But commercial real estate is not without its own money laundering issues. The reasons for this are twofold. One reason why it doesn't happen is because you haven't smashed that like button. Sorry, I had to do it. First, commercial properties often have very large cash flow streams that can be used to launder money in a way not available through private and residential real estate transactions. Leasing or renting out the property with significant amounts of upfront deposits as well as monthly payments make commercial real estate very attractive to criminals looking to move money. Secondly, commercial properties are often set up as LLCs. Now, this allows the owners to remain anonymous and simply transfer ownership for a fee. Now, here are two examples from FinCEN. Now, FinCEN is a financial crimes enforcement network, and they are pretty much the governing body for all things money laundering, at least in the US. Now, in the report from FinCEN, they list two examples of structuring activities specifically in the commercial real estate area. Now, the first example was an individual who used cash to purchase 3 cashier checks, each for an amount at or near $10,000 at 3 different locations of the same bank, and payable to the same payee, which was a title company. Now, the second example was a customer who owned rental properties. This person made multiple cash deposits that were at or nearly the $10,000 reporting limit. Then shortly after the funds were deposited, the customer wrote 4 checks at or near $10,000 and made payable to the same person. When taken in totality, the members' cash deposits and then check withdrawals were pretty much the same amount. So that shows that they're clearly using the account to wash funds and using the title company as a front company essentially. Now, outside of structuring, commercial real estate is often used as an explanation to authorities to justify moving large amounts of money. Now, a U.S. bank reported it received a large wire transfer on behalf of a company registered in the Caribbean, which purportedly developed commercial and residential real estate projects in a Latin American country. So there are a couple red flags there. One, as bad as it may be, when you're dealing with individuals or companies that are located in the Caribbean or Latin American countries, typically the risk level or the risk tolerance for banks is higher. Then if you have them located in, let's say, the Caribbean, let's say maybe Trinidad and Tobago, for example, but they're developing in, let's say, Dominican Republic, having that difference in location is also going to increase the amount of potential red flags, right? Or increase the potential risk factor for that transaction and for that party. Now, the account holder claimed that these funds represented a legal settlement with a governmental agency in the Latin American country. Now, the bank transferred the funds to an account in Europe at the account holder's request. Now, subsequently, the bank learned from news reports that the account holder had actually been accused of fraud by a Latin American governmental agency. This included not only money laundering, but also fraud and embezzlement. Right? Money laundering is never a standalone crime. There's always another crime attached to the laundering. Now, commercial real estate is also often where corrupt politicians go to hide their stolen funds. Now, in the business, they're called politically exposed persons, or PEPs. So if you see PEP, think politically exposed person. Now, one U.S. bank reported that one of its account holders approached the bank to apply for a substantial loan to purchase a business. The account holder received wires totaling in the hundreds of thousands of dollars from his country of origin. Now, according to bank records, this individual had a low income. Nonetheless, he claimed to have been a government official in his native country. Now, this type of activity is unfortunately prevalent in developing nations, where politicians essentially fleece their country, right, and steal money from the country, which really should be going to build the country up. Instead, it lines the pockets of these criminals. What I find particularly interesting is when customers actually admit to evading taxes and laundering funds. Now, in one example reported by FinCEN, a U.S. bank was used as an intermediary or the middleman for payments from the owner of a company located in Latin America to an individual in a European country for the purchase of undeveloped land in that country. Now, an amount close to $100,000 was transferred from the Latin American business to the account of a customer at the U.S. bank. Right? The money was then transferred to the country in Europe in subsequent wires, each sent on a monthly basis for the purchase of the land. Now, when the customer was questioned as to why the Latin American company didn't just send a wire transfer directly to the bank of the land of the seller in the European country, the account holder actually admitted that the purchaser was attempting to hide the source of funds, and the seller essentially wished to evade taxes in the European country where the land was located. Crazy, right? So the bank concluded that it was used as a layering bank, which means that the money flowed through the U.S. bank solely to disguise the true source of funds. We've spoken in detail about the methods and examples of money laundering in real estate, but now let's focus on the parties that are most susceptible to money laundering. Based on an analysis by the Financial Crimes Enforcement Network, 35% of money laundering in the commercial real estate sector occurred with property management companies. Now, a close second with 30.9% of their occurrences are real estate investment companies, and individuals are third with 9%. So what does that mean? Well, if you're a property management company or real estate investment company, you should pay careful attention to your books and the clients that you work with. What are some specific ways to look out for money laundering? So if you're a property manager, if the owner of the property has a tenant who is paying significantly higher rent than all the other tenants, that's a red flag. Or if they have a tenant, but the tenant is never there, if you've never seen them, again, a red flag. For realtors, if a proposed deal includes a buyer and seller who are agreeing to a price that is significantly higher than market value, this could be an attempt by the parties to use the sale as a way to launder money. After the sale is complete and the money is wired from the attorney to the seller, they now have a justifiable reason for the large bank balance, and you are just pretty much a pass-through. Now, real estate agents do have an obligation to report money laundering to the authorities due to the Bank Secrecy Act. Now, though the Bank Secrecy Act applies to financial institutions, the real estate industry is also subject to these regulations because the act defines financial institution as including people involved in real estate closings and settlements. Then there's also the $10,000 cash or cash instrument rule, which says that all transactions greater than $10,000 using cash or cash instrument. Now, a cash instrument would be a money order, a cashier's check, a traveler's check. They need to be reported. See, when it comes to money laundering, the consequences can be dire. Whether you're innocent or not, charges may follow, and there could also be lawsuits from sellers, buyers, anyone associated with your transaction that can lead to financial ruin. So please proceed with caution. That's it for today. Make sure you like the video, subscribe, comment below with any questions you have regarding money laundering in the real estate sector or any other questions about white collar crimes. And we'll look forward to making those videos and talking with you and answering your questions. All right. Again, like, subscribe, and share with a friend. Bye, guys.